Dear valued investors, welcome to Market Insight BRI Manajemen Investasi. In this session, we'll explore the latest market updates and uncover emerging trends to help you make informed investment decisions. United States Zone. The White House said the president's post recommending a 50% tariff on European Union products is not a formal policy. It added that the US Trade Representative has been in talks with European counterparts, suggesting the president's post is part of ongoing negotiations. The second estimate of first quarter 2025 GDP growth will be released this week, and it is expected to show a contraction of minus 0.3% on an annualized basis. The initial manufacturing data for May shows improvement, with the index rising to 52.3, up from 50.3 in April, but it still remains just at the edge of expansion territory. China Zone. Industrial production data year-to-date through April grew by 6.4%, a slight decline from 6.5% in the year-to-date figure from March. Retail sales data year-to-date through April grew by 4.7%, a slight increase from 4.6% in the year-to-date figure from March. Indonesia Zone. As expected, Bank Indonesia lowered its benchmark interest rate to 5.5% in May, citing lower inflation and a stable rupee exchange rate. BI projects loan growth to reach between 8 to 11% in 2025, revised from 11 to 13% previously, and has also lowered its forecast for Indonesia's economic growth to 4.6 to 5.4% in 2025, previously 4.7 to 5.5%. Additionally, BI expects the U.S. Federal Reserve may cut rates twice this year. The current account deficit (CAD) in first quarter 2025 narrowed to $0.18 billion, minus 0.05% GDP, down from $1.1 billion, 0.3% of GDP in fourth quarter. The improvement in the CAD was mainly driven by a higher trade balance, which increased from $11.3 billion in fourth quarter 2024 to $13.1 billion. The government may launch a fiscal stimulus package in June, which could include the following measures. 1. Reintroducing a 2-month 50% electricity tariff discount starting in June. The scope of this incentive will be more limited, targeting only customers with electricity capacity below 1,300 volt-ampere compared to below 2,200 volt-ampere during the January-February program. Negative monthly inflation is expected to occur from June to August. 2. Providing food assistance. 3. Offering wage subsidies. 4. Introducing incentives for electric two-wheelers, electric vehicles. 5. Offering transport fare discount, including airfare and toll discounts. 6. Providing discounts on work accident insurance contributions. Market view. The Indonesia Composite Index IHSG recorded a weekly gain of 1.51%, closing at 7,214 level. Looking ahead, the IHSG has the potential to remain in positive territory. Global sentiment, especially from the US, appears negative due to Trump's plan to raise tariffs on the European Union by 50%. However, the White House has clarified that the president's post is not an indication of official policy. On the domestic side, sentiment is supported mainly by the planned fiscal stimulus package set to launch in June. This suggests that the government is likely to back economic growth in line with its targets. In terms of fund flows, foreign investors recorded a net buy of 2.13 trillion Indonesian rupiah over the past week. However, on a year-to-date basis, foreign fund flows still show a net outflow of 46.68 trillion Indonesian rupiah. The three best performing sectors over the past week were basic materials, transportation and logistics, and energy, which posted gains of 9.42%, 7.90%, and 1.95% respectively. As of May 23, 2025, the 5-year benchmark yield FR0104 declined to 6.42%, while the 10-year bond yield FR0103 remained steady at 6.80%. The long-term bond yields also eased, with the 15-year tenor FR0106 declined to 6.99% and the 20-year tenor FR0107 holding flat at 7.00%. Meanwhile, the yield on Indonesia's 10-year global bond Indon 35 rose to 5.44%, while the yield on the US 10-year Treasury increased to 4.51% compared to 5.38% and 4.49% respectively on May 16, 2025. Indonesia's risk premium as measured by the 5-year credit default swap (CDS) remained flat at 83.38 basis points. Additionally, the rupiah strengthened by 1.34% on a weekly basis, reaching $16,222 per Indonesian rupiah. As of May 22, 2025, foreign ownership in the government bond market stood at 916.70 trillion Indonesian rupiah, 14.45% of the total outstanding, up from 906.02 trillion Indonesian rupiah, 14.34% of the total outstanding as of May 16, 2025. The Fed is expected to cut its benchmark interest rate twice in 2025, with a total reduction of 50 basis points following a 100 basis point rate cut in 2024. The U.S. economy remains on a soft landing trajectory, with projected annual growth of 1.7% in 2025. In line with this, Bank Indonesia is also expected to adopt an expansionary monetary policy in 2025, which is anticipated to have a positive impact on Indonesia's economic growth. The bond market is projected to respond positively at first, driven by improving macroeconomic conditions, and this is expected to be followed by solid performance in the Indonesia Composite Index (IHSG). That concludes today's Market Insight. Stay tuned for more updates and follow us on social media. See you next week in the Market Insight BRI Manajemen Investasi.